the ultimate guide to SMSF loans and lending. Australians, we love investing in real estate, and a self-managed super fund or SMSF loan can make the benefits of investment property ownership a reality for many borrowers. Whether a commercial or residential property, an SMSF loan can play an important role in your retirement plans. So here's a quick guide. What is a self-managed super fund? An SMSF is a private super fund that you manage yourself. SMSFs provide greater flexibility and they allow investors to hold a range of assets, including shares, term deposits, bonds, investment properties, cash, and unlisted assets. A successful SMSF can be highly rewarding, but it can also come with greater risk than a regulated super fund. Managing an SMSF also requires some work, and it's important to seek guidance from a trusted financial advisor. SMSFs can have up to 4 members and they require their own separate tax file number, Australian business number, and transactional bank account. Because SMSFs are a type of trust, you must designate a trustee to have authority over the investment strategy, administrative tasks, and financial statements. What is a self-managed super fund loan? SMSF loans, or limited recourse borrowing arrangements, support SMSF trustees to borrow money to buy an investment property that they may not be able to afford to buy through their SMSF outright. After the purchase, ownership of the property is held in a custodian trust until the loan is repaid. And at that point, the SMSF acquires the title. Throughout the life of the loan, SMSF members have a beneficial interest in the property, and any income generated is reinvested into the SMSF to help repay the loan or increase the value of the fund. While SMSF loans can be used to buy either commercial property or residential property, it must pass the tax office's sole purpose test. This means the trustee must be able to prove that the sole purpose of buying the property is to provide retirement income. What is a self-managed super fund loan application? An SMSF loan application is the document you will need to complete to get your loan approved. It's pretty important. As part of the process, each lender may require different documentation, but most will want to see copies of the SMSF trust deed, the custodian trust deed, and the contract of sale. Now, you will also need to show proof of adequate personal income, and you may need to compile SMSF bank statements, tax returns, audit certifications, and rental estimates. All of this information together, it helps the lender to ensure that everything is in order and that you can actually afford to make the necessary loan repayments. How much can I get from an SMSF loan? The amount you can borrow in an SMSF loan will really depend on your financial situation, as well as your lender and their policies. Now, some specialty lenders offer SMSF loans from $100,000 ranging up to $4 million. You might need to maintain a minimum amount within your SMSF after the property sale. And this amount will really vary and it will depend on your individual circumstances. Some SMSF lenders may also require you to keep a certain percentage of liquid cash. Depending on your lender, there is a possibility that they will agree to waive this if the initial deposit is large enough or if the rental income covers the loan repayments. What are the SMSF loan requirements? Most SMSF loans have 4 main requirements. The first one, the property must be for the sole purpose of providing retirement benefits or death benefits to SMSF beneficiaries. Number 2, if it's residential, the property, it must not be acquired from a member of the SMSF or any related party of a member. Number 3, if it's residential, the property must not be lived in or rented by a member of the SMSF or any related party of a member. And finally, number 4, the property must be a single acquirable asset. If you are purchasing a commercial property, it may be bought from or leased by SMSF members. Now, this must be done at fair market value, and the property must only be used for business purposes. Are there any SMSF loan risks or downsides? Under limited recourse property loans, a lender cannot recoup losses from any other assets held in the SMSF. They can only make a claim against the property which is held in a custodian trust. Now, while this provides borrowers with some level of protection, it is important to do your research before diving in. This is where a licensed financial advisor can help you to help ensure that you understand your obligations and assess whether an SMSF loan aligns with your long-term investment strategy. Can I refinance with an SMSF loan? While it's possible to refinance an existing SMSF loan, few lenders provide SMSF loans for this purpose. As a specialist lender, Liberty has the freedom and capacity to provide loans that traditional banks cannot accommodate, and this includes SMSF loan refinances. Many borrowers have taken out SMSF loans when interest rates were higher or their financial situation was different. And in these cases, it is worth looking into refinancing your SMSF loan to see if there are better options for your individual needs. Do I need an SMSF loan broker? If you have an SMSF and are considering taking out a mortgage to buy an investment property, your first step should be to seek advice from your financial advisor or accountant. If you decide to go ahead, a mortgage broker can help you find the right SMSF loan for your needs and help explore what other lending options may be available to you. And if you're new to SMSF lending, a broker can help to simplify the process and answer any questions that may pop up along the way. Have questions? Contact us anytime. We are sincerely eager to help, even if it's just providing more information. Thanks for watching.